Good day, all. Ira Epstein with your financial market wrap-up on a wild trading day of this Thursday, the 3rd of February, 2022, and we're about 7:20 in the evening or so. All right, crazy day. You saw Facebook got slammed today. A stock of that size lost $200 billion in cap on the market. I mean, that's monstrous in its size. But at some point, it's all going to be built in now and probably done. But it just took everything with it. After the close, the reason you're up so much in some of these, Amazon and Snap came out with great earnings. And so they're going the other way. No one thought Amazon was going to do as well as they did, and they really rocked it out of the park. Many reasons why, but what's the difference? The market is responding to it. Remember I told you don't go through major reports with positions in futures. You trade stocks differently. You don't have a choice. You go through your earnings and that. You don't want to give up your position. As a SPDR ETF trader, I do think you walk away. But when you're trading these other vehicles, you got to be careful. European Central Bank, it was a given. They weren't going to do anything. They've said over and over they're not going to do a darn thing this year. Well, in the press conference, the way the questions were answered by Miss Lagarde, she did a terrible job of trying to hold to that. And all of a sudden, the euro took off out of nowhere and went up 130 or so points. That's a major move by any stretch. We expected the Bank of England to get a quarter-point cut, but nobody expected that on the vote, and it was close. Out of 9 members voting, 5 went for the quarter-point cut, 4 wanted a 50 basis point cut. So up you go on the British pound, and it holds well. What market lost on that? The dollar. You do realize that these prices, the dollar, has fallen 220 points in 6 days. That is a year's move in no time at all like that. Bonds and notes, well, the market's sort of sitting here trying to figure out what to do for itself next. Grains, they were down, but now they're coming back up because each weekend that you go in, you got to wonder what the weather's going to look like in South America. And on Wednesdays, this coming Wednesday, you're going to get the big USDA report. And it's going to be a rocket ship report. The crops either are not as bad or they're way worse, which one of the two, and prices can do anything from there. Energy's still on fire. You can't find enough supply for these economies, and the economies of the world, folks, are not in bad shape. That's what you have to understand. They're not in bad shape. I know the press likes to make it sound like everything's down and the Fed's going to just take interest rates. The Fed is not going to take interest rates and shut down the U.S. economy. They're going to fight inflation, but running a bit hot. You forget what they said a year ago. They didn't mind if it ran hot for a while. They're going to fight it now. It's stupid that they kept going with this, that they're buying still securities until March. That's craziness. But okay, you know, I from a person that's looking at this and they're telegraphing as much as, 4 rate hikes this year, 3 by most of the members, that's what they're talking. Why are you still buying securities? Doesn't make sense. Just because you said you would, shut it off, get the job going, and see how many you really have to do. Obviously, we'll find out. When we come over to the S&P, I know this is so hard to believe. For the week, you're up. You would think after everything that's gone on, you're down. You're up 2 percentage points almost for the week. When you take a look at what the S&P is doing, we bottomed out, as you can see, in that 4,200 level. By the way, I hope you like what I've done. I was able to get the charting software to make the charts nice and bigger, so you're able to see this way better, and this is how it's going to look going forward. What is the trend? It's up. You have a pattern of higher lows, higher highs, but we talked that when you came up, there would be resistance at key moving averages. That's what I've been preaching, and that's what the market has done. The market found its footing once it got back over the 200-day average. I'll show you where the Bollinger Bands came in on the next chart, and I expected it to have a lot of resistance then as it visited the 100 and the 18-day. And it's exactly what's occurred. So I feel that I'm in the groove in understanding where the market's at. The danger in buying it, how do you put a stop under there? It's too much to risk. It's 300 points. Forget it. I'll let somebody else play that. I couldn't do it. All right. Bollinger Band. Once you swung to the right-hand side, instead of the market then going there and pushing lower, once it got over this number, it was pretty much like a release valve. It's over on the downside. But where are we? We're halfway of this break in round figures. The market's fighting a battle for what to do. You're going to walk in the morning and you're going to get what big number? You're going to get your jobs report. Now, ADP's number was bad. I'm hearing numbers of 150,000, but I've also heard 400,000. So it's a little bit of everything that you're hearing on that. If you take a turn here and you look at momentum, you've got this the momentum up, you've got the bias up because you're over the 18-day average, and you have the trend up. At this point, the bullishness is there, but you're in a key resistance area. If it can clear this 45.86, especially on a close, are we talking going back to the highs? You know, as a chartist, that's what I'm looking at. It's hard to believe, but it's a possibility. The more likely thing is that the market stalls here and consolidates. That's what I'm expecting. That's what I'd like to see. The NASDAQ is identical. Once you lost the embedded reading down here, you got yourself going. The resistance, the combination of these two, if you clear it, then the 100-day could be your next target, and instead it's just playing back and forth just as it should. Consolidation, I want to see more of that. This does not have the bias up since the market's under the 18-day average, momentum pretty flat. Not bad, by the way, for a market that saw one of its main components, Facebook, get smashed with nearly a 28% loss in one day, and it's still acting pretty darn good. In the Dow, same thing. You came up, did just the way we said. I'm not going to go through each one of these. You can see they're doing the same thing. We're in that consolidation. The SIC market is still the Russell. So I know that people say this is the one to own. I read at the beginning of the year the place to be. The reason they say that is it's so beaten down they figure it can't come back. The reason it's beaten down is the small caps aren't in favor just yet. Why? A big cap company can handle a lot better in interest rate environment that's going up than a small cap company. Something to think about. In the VIX, as I said, unless you were going to come back down here, I was going to look for the support, and I said this to you here, yes, past 2 days, right where you're at, and that's what the market is doing. I don't expect a prolonged move down. I think the market's now found its home as to a low spot. In the interest rates, remember what I said about getting whipsawed? This is it. This is where you become chop suey. And by the way, I love chop suey, so my egg foo young chop suey, I loved it too. Higher high, lower low, going, and now I want that for dinner. Going back and forth right here, and that's what I think you belong in. But I do think at the end of the day, unless the economy tanks, that this turns out to be a top area and we start gradually working down from it. Same thing in the 10-year note. I just see the market churning right now. Then we get to the dollar index, and if you took my course, and you took that enhanced Bollinger Band course, first time you hit the upper Bollinger Band, you're not embedded. What are you supposed to do? And you did have bull signals all the way up there. Tell me that course didn't pay for itself. Take a look, folks. I'm laughing because it is funny. So now you've dropped 200 points. You've got your support right here at the 100-day, and you're oversold. It is not a buy signal. The market has now got to reestablish itself. This 220 points is a monster move. It's got to find it's spread its wings. Now it's got to bring them back in. And the opposite's true in the euro. I think the euro's going to have trouble right now, right up at the 100-day average. And I'll bet at the upper Bollinger Band, should it reach up there, the pros are out. But I think the pros are coming out right in front of this up to there. That's the zone where I think they'll take their money off the table. The British pound's a real wild one. Boris Johnson's in a lot of trouble. Another key person in his entourage has resigned, a key person. And things just aren't looking good. So it's hard to get real bullish if they're going to have to go into elections. They resign. Where are they going? A lot of unknown. This has been a market that the market's been expecting rate hikes, and another one right after this. A 5-4 vote pretty well tells you the story. Eventually, one of those five is going to give up. and you'll get another vote out. They don't have to go 50 basis points, but to get that other quarter point that they all wanted, I think it's fait accompli. In the Bitcoin, sideways action, uptrend, and as I told you, what this market's doing is the moving average is dropping. Watch this 39,536, how much is dropping. Every day, it's losing $200-300. So when it gets to it, so what? When you lost the embedded back here, this market was sitting way higher. So this market is still not out of the woods by any stretch at all. Brent versus WTI, the prices keep coming in between the two of them. When you look at the energy market, until you lose that embedded reading, each time this market's dropping down in my enhanced Bollinger Band course, you learn how to take advantage of that. Take the course. It's not expensive. You'll get a feel for that right through here. People ask, how do you add on in futures? This is where the areas come in. How do you exit? It comes in against the Bollinger Bands if that occurs. And here's a market to stay away from temporarily. It's not embedded. It's overbought. It's trading against the Bollinger Band. Very difficult. Now, if you haven't seen everything I do and you want to see it, I'd like to give you everything I've got, not my paid courses. But I'll give you my paid research if you haven't tried it for a couple of weeks so you can see it, my written, my oral, everything I'm doing, because I want you to become in our fold. I don't want a credit card. I want to give it away free. You're going to get everything a paid subscriber that's spending $700 a year to $250 a year, whatever they're spending. You're going to see it. I want to give you the ETF videos. I'd like to give you the futures videos, the written commentary, access to the window envelopes that we do, everything we've got. Order entry in the morning. Get in here, get out. See what to do. Profit objectives, moving of stops, widening of them. All these different ways, plus all of our software. So now you get to use the mobile phone app. If you've got, be it a tablet or a PC, we'll give you the software for that to work with for this period. No credit card. Take a look. You determined you like all the information, and we could even give you the Linn Group information. So you see all the info that we're sending out to our clients for hedging, spread trading, options trading, everything we've got there. Quite a bit if you're a futures trader. Just go to our website, under free trial, sign up there. You can always call my staff. They'll have you signed up in 2 minutes, 3 minutes. You'll be getting everything. I'm Ira. Have a good day.